Hello, everyone. I'm delighted to be joined by Thomas Stevens to talk to us about the breakfast briefing that was held very recently in New York. Thomas, could you tell us, to start with, about Corbets and why was it created, please?
Corbets is an investment firm that will focus on fundamental long-short equity investing. It will be staffed by top-tier investment professionals, investors with years of experience covering their respective sectors and companies. Our team is comprised of individuals that have outstanding relationships with all their constituencies, especially the companies we invest in. I believe we are assembling the greatest team in the history of long-short investing.
How is Corbets different to other investors, and how should IR teams think of your firm?
I think Corbets will be different in several important ways. We have a formula for success in investing in our people and establishing a firm that has been built on a collaborative culture. Our hiring hurdle is extremely high. We're looking for very experienced teams that want to build businesses, not run books. This means larger teams, larger books than many of our competitors. This, of course, will also mean bigger positions that will necessitate longer holding periods and less turnover. So it is imperative that we remain very serious fundamental investors and really try to understand our industries and our companies better than anyone.
How are you looking to generate alpha in volatile markets?
I'd like to highlight 3 areas of distinction. First of all is the experience of our team. Many of our portfolio managers, and myself included, have been doing this for a very long time. We've seen a lot of different market environments, credit cycles, and yes, volatility. And honestly, we embrace volatility. Second, we're patient investors. You cannot make money every day. And you need to have a high tolerance for pain and trust your process. We do not let a little short-term volatility change our views on companies or industries. You make money by sticking with your bets. And finally, collaboration is the third point I would highlight about our firm. This is our biggest secret sauce. We are sitting in this room together every day, looking at each other. This is not a work from home business. We're talking about the important issues of the day: inflation, oil, the strength of consumer, COVID, war. So it's really helpful to help see what everybody else is thinking. And then finally, with respect to the market opportunity, many of us have been waiting for a market like this since the great financial crisis. It's a market where the Fed will get out of the way and extricate itself. And we believe we will see real dispersion, and we are looking forward to picking the winners and the losers.
Why was the timing right to start Corbets?
So the timing is right for several reasons. First of all, we have this awesome infrastructure that needs to be scaled. Second of all, our overall brand and ability to attract and retain the best talent in the world has never been better in the history of the firm. You couple this with the market volatility and some of the stress we've seen at other firms and other business models, we're seeing pockets of talent that we've never seen in the past. And once again, about timing, we think the market opportunity as the Fed gets away from markets is going to be very good.
Could you describe your approach to risk as an investor?
Our approach to risk is pretty straightforward. If you are in this business, you really like to take risk. You love risk. But we like very specific risk. We like betting on companies, industries, and management teams. We don't bet on the direction of the market. And again, this is why it's imperative that we know our industries and our companies better than everybody else.
What is the outlook for the financial sector? I mean, what keeps you up at night as an investor or IRO?
Financial stocks are heavily tied to the economy, especially those that are balance sheet heavy. So therefore, their performance will be very linked to the direction of growth. Importantly, though, if we go into an economic downturn, balance sheet and capital level of financial firms are much better shape than in prior crises. So this is a very good thing. The most concerning thing for us right now is inflation, because inflation will dramatically impact both monetary and fiscal policy solutions.
How would you describe the current outlook for the global economy?
Generally, I would say I'm cautious right now. I've been doing this a long time, and I believe this may be the single most uncertain environment that I've seen in my career in terms of predicting macroeconomic developments. For me, I think it is very difficult to accept that all the world's central banks and leading economies, all with differing political and fiscal agendas, will be able to execute a soft landing in the face of inflation, war, and a global pandemic. So I'm cautious.
If a recession does occur, how will this recession be different to the one experienced in 2008?
So I think there could be a lot of difference, but I think there's good news and bad news. As I just highlighted, I think one of the biggest differences is the strength of our financial companies and the overall financial system. There were some companies during the great financial crisis that were actually part of the problem and actually caused it. But I don't think that is the case right now. You look at bank balance sheets, funding, capital, all much better to be equipped with a downturn. Again, the bad news is inflation and how it may limit our policy choices. And inflation is something that many investors have not seen in their lifetime, never mind their investing careers.
Which factors are you most focused on during this time? What economic indicators should companies pay particular attention to?
So at risk of beating the dead horse, we're most focused on inflation right now. And this is just different than prior cycles. But we're also paying close attention to liquidity and making sure that financial markets are operating efficiently. And we want to make sure that our companies are able to tap into capital markets and raise money when they can.
What learnings can be taken from other highly volatile environments?
You have to expect the unexpected. I mean, just in the last few weeks, some of the dramatic moves we've seen in financial markets. You know, in 2006 and 2007, there was a common refrain that we would never see housing prices go down on a national level. Well, guess what? That certainly happened. I think another thing we learned, and companies should know this, that valuation can be overrated, and valuation discrepancies can last for a very long time. And then finally, I would say balance sheet strength, funding, leverage, liquidity. These things may matter more than earnings per share.
What makes one company stand out against its peers in times of a recession?
Well, I sort of hit on it just in the prior question, but I would say again, funding and liquidity, balance sheet strength, lower leverage. By maintaining a more conservative profile, financial firms will be able to take advantage of opportunities when they arise. It also allows you to invest in your clients, in your business. The best companies in the world are always investing through both good and bad cycles.
Shifting our focus to the outlook for the financial sector, what are your big concerns around the sector looking forward?
Well, I won't mention inflation again, but that is still top of mind. There are some potential areas that we are paying attention to. Certainly the consumer, we're worried about the consumer, especially on the lower end of the consumer. We're seeing some stress there. And commercial real estate is another area we're looking at.
What can finance companies do now to prepare for an upcoming recession in the first half of 2023?
I think financial companies have to maintain their balance sheet strength, maintain great access to funding and capital markets, tighten lending standards, and be willing to lose market share if competition gets irrational. Focus on the long term, not quarterly results. This will always put you in a position to take advantage of opportunities when they arise.
What is most helpful to hear about from IR teams during these times?
I think IR teams have to just put themselves in our seats and think like a buy-side investor. Do as much work as you can to understand the issues. Lean on the buy side and lean on the sell side. We do an incredible amount of work on the economy, on industries and companies, and we're happy to share what we think. So take advantage of it. It will help you tell your story better. And you need to know what the important issues of the day are before you get on an earnings call or go to a conference. Be ready to answer questions on them and be prepared to increase disclosure if needed.
Companies tend to communicate even more during difficult times, but how can companies provide better quality information, do you think?
So financial companies are highly regulated already and have great disclosure, right? So we have a good starting point. What we like to see in these times are sensitivity analyses to various economic indicators or asset prices. Like I said, it's going to be very difficult to predict what's happening. But if you can show us a sensitivity analysis in various economic outlooks, that's always helpful. And again, always pay attention to what are the most important issues of the day and give updated disclosure if necessary. For example, what is your total exposure to Russia? That is something our team should be ready to disclose on quarterly calls now.
Should companies continue to provide guidance in the current environment?
I have no really strong view here. So it's so very hard to know what the future is in this environment. So I would go back to maybe scenario analysis, sensitivity of what could and could not happen in various economic situations.
And my final question. It is often said that the IR function shows its real value during difficult times. What can IR teams do to be more impactful in these times?
I think this is sort of, I answered this question in a very similar way in a previous question, but again, put yourself in our seat, make sure you're looking at it from the buy side perspective, anticipating what questions we're going to want to know, think about the big issues of the day, and communicate with us. Call us up, ask us what we're feeling, what we're thinking, what your competitors are doing. We would love to have a two-way dialogue, and we're always willing to help. There's nothing more exciting when I get a call from a company, and ask me what's going on. Well, it's usually what's going on with my stock, or what's going on with the market, or what's going on with the competitor. We love these calls. And again, just be ready for increased disclosure if you can do it when you know what the real serious issues of the day are.
Well, thank you very much for sharing your fascinating insights with us at IR Magazine. Thank you, Thomas.
James, a great pleasure. Thank you for your time.